Thank you, Christine. My name is Steve Travis. I am an underwriter with United Atlantic Mortgage. This is actually my 30th year in the industry. I was in sales for up until from 1994 to 2011, and then I transitioned into operations, got into underwriting, got my DE, and have never looked back from underwriting. We're going to talk a little bit today about VA loans. As Christine alluded to, we are a military community, so VA is very, very prevalent. It is the #1 loan program for Hampton Roads, followed by conventional, followed by FHA, and then followed by USDA. So the VA loan program was actually started in 1944 by Franklin Delano Roosevelt before the end of the World War II, and it was created to be able to offer benefits to our GIs overseas, to have a no down payment loan backed by the federal government, just like VA or FHA and USDA is, with the exception that this is a 100% product, meaning that they can borrow 100% of the purchase price and not have any minimum down payment if they don't want to. Some of the benefits, some of the pros for VA mortgages, as I said, is no down payment. So they have no mortgage insurance on them. They have some pretty non-stringent guidelines in comparison to Fannie Mae conventional. They can be used more than once, which we'll talk about in a second. Some of the cons on VA mortgages, as you probably know in this area, is sellers are less likely to take a VA offer over a conventional because of the stringent requirements for the appraisal. So VA and FHA appraisers have a little bit more of a stringent checklist to go look at a property to determine whether or not there's any issues for the property valuations that VA and FHA have for their appraisers. Conventionals, pretty lax. You can just kind of go in, look through, see this, see that, get most of your pictures offline, whereas a VA appraiser has to put, what they call shoulders in the attic, have to look at everything, determine whether or not everything meets out pursuant to the minimum property requirements. So that's a con. The VA funding fee is another con. It can be pretty aggressive as far as cost is concerned. First time use of a VA loan is 2.15% of your loan amount. So if you're doing 100%, it's 2.15 of the loan amount. If you're putting money, it drops down all the way down to 1.25 if you're putting 10% or more down. But if you're a repeat user and you're not exempt from the VA funding fee, it's 3.3% financed on top of the loan. And that could be a great deal of difference depending upon the loan size. So those are pretty much the only two negative cons when it comes to VA loans. Some of the benefits that we were able to do for our veterans, not only after the purchase, is VA allows for what they call interest rate reduction loans, or IRRLs, which are now coming into the season now, where a lot of people are lining up to do these VA IRRLs because they're no credit qualifying, no appraisal, no income, no assets. And if you have buyers that have purchased in the last 2 years, as we have, you've got some buyers already at 7.5%, and as of yesterday's end of the market, we actually have some 4.25-5% interest rates that they can literally pivot to as long as they've been in the property and made 6 payments on time. They can literally just sign for a new loan. Really quick and easy. They have a 6-month rule on that because of previous experiences with churning, when you had all these out-of-state lenders were buying these lists and calling the veterans and having them refi over and over again, thus eating up all the equity. So it's a six payments, 180 days in order to do the IRRL. Some of the things that are distinct about VA, and it's good to know if you have buyers that already have a VA mortgage and they're looking to upgrade to a new property, given that the loan limits have increased year after year, most veterans can easily afford, on their eligibility, $300,000 mortgages on top of a previous mortgage that they had for $400,000. So what that basically means is you could have a veteran vacate their property, rent it out, buy another property using 100% financing because the eligibility is still there for them to purchase again. Some of the benefits of that, unlike the other agencies, are if they are going to rent it out, you can simply use a lease to offset the departure resident's mortgage. If they don't have a renter lined up, you simply get a real estate agent to provide some comps in the area, and we can use that rental income based on those comps for departure without actually having it rented out. Now, no other agency does that. And that's a huge win-win for the veterans looking to build their real estate portfolio. As I said, the VA has some specifics when it comes to occupancy. I will say I talked to two agents yesterday. There is a big increase in occupancy issues from veterans buying multi-units. So the thing is now, veterans are saying, I'm going to live in this duplex in kind of a less than desirable neighborhood. They'll close on the loan, 100% financing. Then they'll get a police report. This is very common. I didn't know this was for the area. And then they'll convince the lender they want to buy another property, provide a police report showing that there is crime in that area, and that's the motivation to now exit that other unit and buy another unit. So there's a lot of scrutiny going on right now when it comes to occupancy. But typically speaking, VA and like all the other agencies require that a veteran occupy the property or their spouse within 60 days of closing. VA has updated their guidelines where it used to be a spouse or the veteran had to occupy in 60 days. Now, as of 2 months ago, the VA put out an update on their circular that states if you can't make it in 60 days, but you have a tentative date that you can occupy, i.e. PCS orders, because we used to measure if somebody was coming into town, we had to kind of measure out where they're going to be in the property within 60 days, or their spouse. If they're not married, now the VA says if you just use your PCS orders to show that you're going to be in this property in February of 2025, you can close now. Most people don't know that. So that's a good issue for borrowers that are looking to buy now but aren't going to be in the area, but they can have a defined period of time. We can certainly help them purchase now while they're overseas. Is there any questions so far? So, interesting, there is none. So a veteran who's using their VA eligibility for the very first time can buy a $10 million property, oceanfront, and finance 100% of it, as long as they qualify with a mortgage payment. So there is no more loan limits for VA. Where it comes into play is if you have eligibility that's already tied up, then you're tied to the eligibility loan limits of the same Fannie Mae, Freddie Mac, which is $766,650. So then you're capped on that for being able to get the financing up to that loan limit.
Can someone that's not a veteran buy with a veteran?
So will we please hold our questions to the end of my presentation? So one of the things I was going to bring up is the eligibility. So we have a lot of veterans that are purchasing with girlfriends or boyfriends. As long as you have an active duty, or retired veteran as one borrower, you can have another borrower that's not spouse or active duty on the loan with you. But it will require a 12.5% down payment. That's half of the 25% of the guarantee that VA does. So whatever you're doing, the veteran will be able to get their financing, but the borrower that's not a veteran or a spouse will need to come up with 12.5% down payment on the loan. Another big issue that we see here locally, which is why it's always a good idea to have your borrowers pre-underwritten, which is what we do at United Atlantic Mortgage, is a lot of the condos in this area are not VA approved. A lot of veterans will go under contract and they will not check the VA condo list to determine whether or not that condo is under a VA approved. There are ways of doing that if it's not, but it's real messy. It takes a while. It's not like the FHA spot condo review. So it's always important to know that the VA condos need to be approved through the VA condo portal. And once you have a VA approved condo, there's no additional documentation that's necessary. It's approved, you just go with that. You don't need to get anything except for the master's insurance updated. Every eligible veteran that applies for a actually active duty that applies, the guidelines state that the minimum time in service necessary for getting a VA eligible loan is 90 days of active duty continuous service. So if you have somebody just getting into the fleet, they have to be active duty for no less than 90 days to be eligible for the VA financing. We pull certificate of eligibilities on our end to determine if they actually are eligible for VA financing. A lot of cases we have a lot of reserves that apply. The typical guidelines for reserves for time in service is 6 years before they're eligible for a VA financing. Certificate of eligibility will show how much eligibility remains if there's ever been used to determine the VA funding fee. Another interesting point on the VA financing is they have a program where surviving spouses can be eligible for receiving VA financing through their deceased spouse's eligibility. Requirements are that the veteran, that the spouse has not remarried since the death of the other spouse, and that the veteran had to be diagnosed that while in service or a service-connected disability and didn't remarry. We are seeing a lot of those coming in from spouses who are now using their deceased spouse's eligibility for the VA financing. And the fun facts that I had, give me 1 second. As I said earlier, all of our loans that we do are pre-underwritten, so we don't really have these issues where it comes up with condos or eligibility. But some of the promises on the rental income, as I said earlier, it's important to remember that if you have a departure residence that a veteran is going to be renting out, you won't be able to use anything above and beyond the actual, principal, interest, taxes, and insurance that is that's being covered from the previous mortgage. Any questions? It's kind of down and dirty. Nothing? You look like you had a lot of questions.
Me?
Birthday girl. No?
No,
Okay.
I just needed the information.
All right, well, I've got over there our UAM quick facts. As I said before, most of everything that I do is kind of front line with your buyers or Christine's buyers. We kind of go through a pre-underwrite before they ever go into contract, which is kind of how we're able to have these offers that are written for 15-day closes. If you need me, Christine, I didn't bring any cards, but I don't even actually have any cards, but she'll pass my number out, my personal cell phone, for any kind of scenarios, weekends. We are obviously working on weekends, and anything I can answer. Awesome.
So what are the current